Hello everyone, welcome to today's webinar. Hope you all had a wonderful weekend. And jumping into this trading week with the new contracts now that roll over and options and futures expiration is all completed. So today we're going to talk about setups from last week. We'll go through the markets. We'll talk about where we're at, where we're headed, some of the different things that we saw last week. In last week's webinar, we talked about futures rollover specifically, and as most of you know, the week between futures rollover and futures expiration is a little bit screwy, so the may not be the best timing of this particular webinar, but we'll do more similar ones, reviewing the setups and things like that down the road as well. So first things first. Trading carries a high level of risk. You're subject to lose all or more of your original investment, so don't trade with money you can't afford to lose or money that, if lost, would affect your current lifestyle. The information in the presentation is for educational purposes and is not intended to be financial advice. The purpose of the webinar, as always with all of these webinars, is to help you better understand the markets and improve your skills as a trader. I believe a balanced life leads to a healthy life, and our attitudes really do influence our behavior. Trading is a small but meaningful part of the bigger picture. So without further ado, let's just flip right over to the trading screen. And let's jump right in and start talking about where we're at, what we can expect going forward. We'll talk a little bit about the VIX. I won't touch too much on the NYSE tick specifically, but we'll go through the ES, we'll go through the 6E, and we'll take any questions that you have. So let's jump right in. And if we start with the ES, if my Thinkorswim loads here, okay, one of the things you can do if you ever do have a sluggish Thinkorswim, if you go to the Help tab and hit the Collect Garbage, that will typically free up some space on the Thinkorswim platform. If you leave the Thinkorswim platform open 24 hours, then it begins to build up and take a lot more CPU space, capacity. So what you can do is go up here and hit Save Grid. So that will save your drawings, and then you can close it and then reopen it in the morning, or if it's been open for a few days, and that'll help speed it up a little bit. So it just kind of is a little sidebar there on the Thinkorswim platform. You know, most programs, when you leave them open for a couple days, they tend to build up and slow down the computer. So what I'm going to do is we'll start on the daily, and now this is the ES continuous contract, so it's adjusted for both the June and September. So last week we talked about futures rollover and how they kind of manipulate or manage trades during that time period. And then what happens now, Monday, the day after expiration, all of the data is then kind of absorbed into the continuous contract. So the first thing I'd like to do is just refresh what we had last week for economic news. So if I pull this over here, this is just the calendar from last week, and Monday was a little bit slow. There wasn't anything major on the calendar. The big, actually, this 11, okay. The big news kind of during the week was the jobless claims kind of on Thursday morning, that pre-market hour before the bell. And typically you notice that an hour before the bell is when we usually get, an hour before the NYSE bell, is when we usually get that block of news. Throughout the day, random folks will be speaking, and we'll have some things related to the auction and the Treasury notes and the auctions, and that doesn't really affect the futures markets so much. Neither does the petroleum and the gas reports, but they're all just nice things to note when you come into the week. Know that, okay, it's 7:30, we have a news announcement, or there's nothing on the tape. So last week we had some stuff going on an hour before the bell, and then Friday it noted here that quadruple witching. So we have the expiration of both futures contracts and option contracts. So all the commodity most of the commodity contracts, the index futures, all expire that that March contract. Earlier I said June and September. I meant to say March and June. And so now the March contract, the June contract has expired, and now we can move to September. So for this week, nothing on this Friday, and there wasn't really anything going on today as well, anything super major to move the markets. The FOMC meeting is fairly important, and we had a G20 summit that began today. The meeting on Wednesday will be fairly important, and one thing to caution, because things tend to slow down a little bit, especially the hour into the FOMC meeting announcement, which has been pushed up the last few sessions to 12:30 Eastern Time. So that's something to take note of. I don't like to trade the hour before the FOMC meeting announcement, and usually that morning can be a little bit slow, and if it is volatile, typically we'll drift back to the prior day's close and kind of be in a position of flat standing into the announcement. After the announcement, extremely wild, but it can get very technical in the weeks to follow. So really looking forward to this announcement on Wednesday. Again, a little cautious whether you're trading half size on Wednesday or simply just, being very cautious in the morning. Certainly around the announcement, things can get very wild, and it's not a very good idea to trade immediately after that announcement. But it's important to to watch and pay attention to what's going on. And then Thursday, just to conclude here, some big news. 7:30 again, jobless claims, and 9 o'clock, it will be Central Time. 9 o'clock Central Time, Philly Fed and existing homes. So that's what's on the tape for this week. Last week was a little bit lighter. And so let's jump right in and start talking about where we're at here. The draw that we've had for a while now, the daily long on the ES, still hasn't traded down here. But we did come into the halfway back short last week. And if you recall, we had talked about, in this larger time frame, we're either going to have a break of the 61 of the short or a break of the 61 of the long. So the short did trade first, but then the opposing, I always like to draw the opposing. So what we had was, I'll go ahead and delete all of the drawings that I have up here. The daily short is below us, and we can draw that well in advance because it's such a big level. It's just all the way halfway back. And then draw up the opposing short, and that ended up trading first. So whichever trades first is the setup that I like to take. And since the halfway back short traded, that's the one that I place more weight on at this point. And conveniently, it takes us down into the halfway back long. Well, what we had happen at the end of the week prior, we traded into the short. Beginning of the week, we traded down into the halfway back long. So on the daily time frame, it's important to know that we have a short up here and a long down here. And within that, it's perfectly valid to take shorts off of this level on the 15-minute time frame, in which I'll zoom in a second here. And once we come down to this long and we break 15-minute shorts, it's also valid then to take 15-minute longs off of this level. Because this range is so wide, and this is a daily chart, it's okay to go to the 15-minute chart and trade with what is potentially the trend or the new trend. So again, we're looking at the 61.8, so 1360 and 1290 roughly as our lines in the sand, our failure points. And if we trade up to the next 15-minute target, then we'll simply draw up the next long setup to whichever those highs end up being and look for an entry in the long direction. If we hold the 61.8 and trade lower, then we'd go from highs to whatever those lows end up being and look for shorts down into the 1240 level. So that's kind of the bigger picture, and that's how I always like to start coming into the week. So we'll kind of ignore today's data here, but we have Friday, Thursday, Wednesday, Tuesday, and Monday. So a lot happened last week, and if we zoom in to the 15-minute chart, we have Friday. Friday would be here, Thursday, Wednesday, Tuesday, and Monday. So I'm going to add an extra day just so we can get all of the data in here. So this chunk is what we'll be looking at from last week. And I'm going to keep it all on one chart, and I'm going to try to flip back and forth. I can only get a few days of tick data in past with the history. So I won't be able to go super detailed, but I'll try to maybe flip to a 2-minute chart to get that more detailed data. So this is the short that's above us, the daily short, and this is the 15-minute or the daily long that was below us. And it's important to keep those. I like to keep those levels on the same screen on the same chart so that when you zoom in, you have those at a reference point. So Monday, we'll just go like this. So coming into the week, Sunday, this is Friday, so coming into the week here on Sunday night, Monday, we shot right up to that daily short. And that was, the Friday before last week. And so it's important to then look for 15-minute shorts on the 15-minute chart. With zooming in a time frame, identifying that the larger trend is down, we'll be looking at 15-minute shorts. And Monday was one of those days where we opened up above. The prior day's close was about 13.18, if I recall. So it was about here. And we opened up in the morning. The pre-market session, we were rather extended. So we were over the 10-point mark, which means that there was some substance to this move higher. There was some professionals stepping in, big money, whether it's institutions or big traders stepping in to push the market higher over the weekend in the Friday afternoon session and then into Sunday night when we reopened. So there was no specific gap fill entry on Monday morning, but we did end up filling the gap and then continuing in extensions to run lower. And not only did we run lower, but we ran right into the 50 daily long that was then below us. And then things got really choppy on Tuesday. So, a lot of times on Monday is when you do see those kind of gap and go days, or days that the market moves very strongly in a bull or bear flag. In this case, it ended up being kind of a little bear flag pattern where an extension traded later in the day, almost halfway through the day. But typically Mondays, or at least in my experience, typically Mondays are the days where I have the fewest trades. Friday would be the day with the second fewest trades. And then Tuesday, Wednesday, Thursday is really where I find that most of my trading takes place. Whether it's just, traders easing into the markets on Monday and then settling out on Friday, or the fact that, news happens over the weekend, things come out in Europe, and the market does get pushed in one direction and it makes it harder to enter. But usually Mondays end up being days, at least on the ES, where looking at the tick, at tick extremes can be helpful. But it's important to stay patient on Monday because, on a 15-minute chart, there was, a small entry in the morning. If you were to take a trade, a 15-minute short, we started up here trading off of 1340, and then the first setup here on Sunday night was really tiny. We then pierced it just slightly and then used that same anchor for another 15-minute short in the early morning session. This would be around the European Open. And then from there, we did continue to go lower in 15 minutes. A couple of them ended up going past their targets. For instance, right here we tested a couple of times. Again, this is in the really wee early hours of the day. And then we went right into extensions to really send the morning lower. So because there wasn't much distance between the short and the daily long, that long kind of acted like a magnet. And coming into Tuesday, then we ended up retesting the low, or the 15-minute long, and at the beginning of the morning, I think we had a low tick down here at around 9:15 or 9:20, and we ended up trading off of the 15-minute, or going into 15 minutes off of that daily long. So drawing from, I think I can get data from that day here. Let's see if I go 5 days. Yeah, it's only giving me, okay, there we go. So if we could zoom over, that is, Tuesday was the 12th, and here is what I'm looking for. So, okay, so this is Tuesday morning on the 512 tick chart. My times down here are probably a little bit hard to see, but they are central time. So the morning started off here on Tuesday. I'll mark the 8:30 open, or the NYSE open low, and then the first half hour high was in this range. And then keeping in mind that, you know, we're chopping around here, we're at a daily long, so taking a halfway back short at lows is not the most ideal setup, because we're at a daily long. So in the case of Tuesday, it was a matter of ignoring those shorts and looking for a long setup once that first half hour passed by. So marking the first 30 minutes of the day, we had the high and the low. And if we zoom in a little bit more, trading off of the daily level, we ended up not only just moving up a little bit, but really ripping pretty quickly. And there's a couple things that you can do down here at lows. It's typically not in my style to immediately start pulling extensions, even though that's what ended up occurring. So what I will do, if I draw in Tuesday's case, I started by drawing from lows, and you pull the highs, as I did in, you know, we didn't get a retracement down here. So I went ahead and drew the first extension in hindsight, because you don't know if it's going to trade in these smaller time frames. And then what I will use is that same anchor to new highs and enter on the second extension. So a lot of times the extensions will end up using one anchor to a high and then use that same anchor to a new high, at least on the smaller time frames. And since we were so dirty down here, meaning since we came down, we chopped around in the first half hour, and we were just moving back and forth right around that daily long, there really wasn't any sort of entry on the 15-minute chart, because we've been chopping around here on Tuesday morning. And so the first real entry was the second extension, at least that I could see at the time, was the second little extension down here, and that was right about at 10 o'clock or just before. And then, you know, I had a couple questions about, you know, managing the position once you're in, and what I like to do is simply trail my stop on the ES by trailing the first. I'll start by trailing the halfway back and put it under the 61.8. In this case, it was 13.0450. I'll put it under the 61.8, put my stop under there. But then when we really start to move quickly, I'll just zoom in a little bit here, and I'll trail each swing low. So in this case, since it's a long, I'll let this pull back a little bit, and then just move my stop underneath the next swing low. And then as long as we get, you know, a few candles of pullback, then I consider that, you know, a valid swing. So one candle is, not much of a pullback that I would consider. But in this case, entering down at the second extension at 03s, and then rounding. I always like to round. So this is an odd number, and the entry ends up being rounding to 25s, and then I'll add a tick to make sure I get filled up in this region. And then I'll typically move my stop to -4 once we move at least 2 ticks in my favor. And I'll keep my stop at -4 for a while because we end up usually chopping around or at least retesting on the ES. So once the extension at 0350s trades, again, as I said, trailing at first the halfway back, and then since we pulled back and then rallied pretty strong, continuing to trail the halfway backs. And as we really start to get up here higher, it can be 2 ways to go about it. And so entering at 0350s and trailing each halfway back here, this was a pretty quick thrust up, and so since you're locking in profits pretty quickly with a full halfway back each time. Each leg up was pretty volatile, meaning we moved pretty far pretty quickly. Then placing your stop up here at it was 07s, yeah, 0750s or 08s if you'd like. You're moving away. You're already in the money a couple of points. So giving it a little bit of room is nice, but I don't like to give it too much room. So I ended up having my stop here at, let's see if I look at my notes. So 1050s, and that's where I ended up being taken out down here. And then it's at that point where on the 15-minute chart, I will look to reevaluate where we're at, and we were right in this region, pretty close to the 15-minute long, I'm sorry, the daily long still, but drawing the next 15-minute is where I like to go from there. So once we break on the smaller time frame on the 512, I'll zoom back out to the 15-minute and wait for that next pullback. And in this case, it did occur with a little bit of a front run, meaning it didn't get all the way back, halfway back. And right down here. So we came down about a point, I think it was. Yeah, 775s. And the halfway back by rounding, and if it's an even number, you can even just add 2 ticks, so 07s. So we didn't quite make it down there, so I didn't have anything to do at this specific entry. But then we did end up rallying into the close, which was nice. Let's see. Gary has a question about the extensions. Yeah. So Gary's question, with extensions, they're fairly tricky, and you don't know when the first one. See, an extension versus a traditional halfway back, I can draw from lows to highs. And it was at this point, at 9:45, I was waiting for a pullback. Once we started to rally, I said, okay, there must be something else going on here, and there must be something else, whether it's a program or another big institution, whether they're looking at the halfway back methodology or some other sort of signal. There was something here that they were looking to buy. And yes, we had a daily long right at that level, and then we also had an extension. So once we start to rally and break these new highs, I draw the extension, and then I simply draw the new extension from the same anchor to new highs. That one didn't pull back. Same anchor, new highs. This one did pull back into the extension halfway back. So I'll use that same anchor to new highs and take the next test of that level if it's an important level that I want to get in at, which this daily halfway back long was. So waiting for the second extension to enter. Yep, That's correct. And no, like I said, extensions are a little tricky. They don't happen very often. You know, one of those things, like I said, with rollover week, that things can be a little bit screwy. You have two contracts trading at the same time, and you know, different people looking at different prices. So if we come back out to, this is Tuesday here, and if we move, this is Tuesday here. If we move over to Wednesday, things got a little bit sloppy, middle of the week, and rid of this guy. So if we were to draw from lows to highs, we had a nice entry at, I think it was 9:30, 8:30 Central Time. And why don't we zoom in? Let's see. I think memory serves me correct. Yeah, so it was closer to 9. So the first half hour, like I say, I don't trade the ES, don't actively trade the ES. And once 9 o'clock hits, if we do get a 15-minute level like this, that's close, and you know you don't get in at the 15-minute exactly, it's okay to zoom into the tick chart and then take the first micro or the first setup on the 512 tick that occurs after 9 a.m. because you know you do want to get into the 15-minute trend, and if you can't get in, or if you know your rules don't allow you to get in at the exact level, then taking the first micro after the 15-minute trade is another high probability trade because you're still waiting for it to pull back. So we broke the swing high, which is important. We were at a 15-minute level, first halfway back, 13.10.25, round either by 1 or by 2, so 13.10.75, and the low ended up being 10.50. So that allows for a tick to get you filled. Sometimes you get a magic fill, meaning it doesn't trade through, but oftentimes it needs that tick to trade through. And then from there, this was a nice trade. We didn't get all the way up to the target. It had about a 20-point target, but we only made it up to prior highs. And if I zoom in a little bit, a couple things you can do. Like I said, I like to get into the trade, move my stop to -4 once I get +2, or once at least +2 trades through. And then I like to give it a little bit of room, at least on the ES, to move away. And so you can trade really tightly, entering at 13.10.75, and then trading each halfway back on that same tick chart will certainly keep you in the move for a couple of points. And then once a little larger pullback starts to occur, which one did here at 13.15, it knocks you out of the trade. And this is a nice way to go about it when you enter on the tick chart to exit on the tick chart. When you enter on a 15-minute chart, to exit based upon the 15-minute chart. So I like to trail my stop on the 512 tick chart. If I enter on the 512 tick, just like I do with the euro, and it can still yield, this was almost a 5-point trade, and before getting you taken out, and then it's just a matter of, okay, zooming out to the 15-minute chart, drawing the next 15-minute setup, which ended up being quite bullish. We didn't even make it down to the next halfway back. So it's just a matter of waiting for that swing high to break, zooming back in to the 512 tick chart, and then drawing up the first halfway back once that swing high breaks, and then re-entering into the trend continuing to be higher. And then you can simply trail the full halfway back of each tick chart as we move higher here until you get taken out. Or sometimes what happens is in the afternoon rolls around and it starts to get close to the end of the day. Not in this example particularly, but if you do get into a trade and you're hanging in the afternoon, I like to just close out, no more than 30 minutes before the end of the day. Usually I'm out by 2 if the market's closing at 3. So, Entering on the 512, exit on the 512. Enter on the 15, exit on the 15. Let's see. Sean's asking about Thursday, Friday. Instead of coming to Thursday, had a long halfway back that touched and went in the first half hour and never looked back. Do you have any exceptions to your rule? No. So the question I think here is, do I have any exceptions for the first half hour on the ES? And I really don't. I just pass on all trades that occur within the first half hour of the ES, because if I make an exception for Thursday's trade going into Friday that ended up ripping higher and like you said, never looking back, if I make an exception for that, I would also be making an exception for the trades that don't end up working out, because I don't know that it's gonna work out. I don't know that it's gonna move strongly after that first half hour. Typically there is a setup. If there isn't, and we're just that strong that day, typically that means that we'll continue to be strong the next few days. So I don't like to violate that rule. You could call me stubborn, but that's just sticking to those kind of little rules. And some trades you'll miss, but it'll also keep you out of a lot of chop and a lot of trades that do occur that don't end up working out because it's that first half hour of the day. So let's see, 14 is Thursday. So this is Thursday. In the afternoon, we did have, so again, like I said, Wednesday was kind of a nice move, but we didn't get that follow through all the way to the target. We were still holding the 61.8 until the late evening hours, and then it failed. And so I kind of looked at that as a retest of the daily long. The two contracts, with them overlapping last week, there were a little bit different levels for the daily long, so that may have been why we had a lot of this chop down here. But then going into Thursday, which was fairly quiet, if I recall, going to the tick chart and scrolling back. 14th. So the market opened, and the low of the first half hour was here. The high was about here. So, oh no, Thursday was not a slow day, and so into the morning, kind of chopped around. The prior day's close was 09s. Let's see. Yeah, it was about 07s. So we ended up above, looking for a short into the morning. Actually, we started above and looked for a short into the morning. Little setup at 6:30, and then we actually rallied again. So we traded down into the gap fill, rallied above it, and then set up again short at 8 o'clock. And this particular trade I was taken out of just because we ended up retesting up here, and I think I was ticked for a tick or two. But then we ended up moving down into the close of yesterday, of the prior day, Wednesday. And once we rallied, again, that first half hour, letting things settle out, first half hour occurs, and then we ended up chopping around for that mid-section, that mid-portion of the day. So this is kind of my gauge, this period right here, 9 to 10, this section here. And when we end up chopping back and forth around here, I will typically, with not many setups, with not a whole lot going on, I'll typically end up closing down early for that day. And we did have some stuff into the afternoon. Yeah, Sean mentioned an opposing short, which, not to get too confusing, but if we go out even a little bit further, 10 days, 15 minutes. I know I'm bouncing around between the charts, but going from highs to lows. We ended up trading at the yet another opposing trade. So not only did we chop around that first hour, but we were in a short, in a long, and then in another short. So we're getting tighter and tighter and tighter in that wedge formation, making lower highs. So this is a lower high, this is a lower high, but then at the same time making higher lows, higher low, higher low. And yeah, Gary mentioned there was some news in 613. I remember that, yeah, I don't think there was anything on the calendar, but we did get a little bit volatile randomly. And let's see, he drew a setup, took a long at 1315, around 9 o'clock on the 13th. And let me go back to the tick chart. Scroll back to the 13th. Looking at 9:15. Yeah, and this was, I think this was Wednesday the 13th. And so I believe it was, so you're looking at the little long on Wednesday at 13:15. Yeah, that's what we mentioned just earlier. Yep. Yeah, so when we don't make it down all the way into the halfway back, I will always make sure, if I'm going to take a micro, I will always make sure the prior swing high gets taken out first, because right here we're in little micro short, little micro short. Now we broke the micro short, and I like to wait for that little swing high to get taken out. So just as you did, drawing up the first micro long, and then 1315 for that entry. You can get a little fancy with some of the draws on the 15-minute chart, meaning you can pull from different anchors, and sometimes when one 15-minute works, for instance on Thursday, we had very late in the afternoon a halfway back long trade, and that's one of the times where I will fit, in hindsight, because you don't know that this level is going to trade until it does sometimes. And sometimes in the last hour of the day, things can get a little volatile, and kind of like the first half hour of the day. So I ended up having a 15-minute long setup that I didn't take here in the last hour of the day on Thursday, but ended up setting us up into Friday into a little series of, since we broke out of the negative 23% target, ended up going into a little series of extensions, and then trading into another extension later in the day on, actually in the morning on Friday. And that held, traded down to the 61.8 to the tick, and then we ended up going into, you could have drawn from trading hours only, which is something that I will do, something that I will look at if I go to just trading hours only on Friday and go to the tick chart. And 6:15 is the day that I want. 9:30 is what I'm looking for. And so 15-minute longs in the overnight, and this is trading hours only, and then using the lows from Friday, first half hour lows to first half hour highs, oops, as I like to always mark and know where those are, roughly low and high, and keeping in mind that we're sitting right within that first half hour's range. And just as we were sitting right on top of it on Wednesday, sitting within the first half hour's range, keeping in mind that this particular Friday was options and futures expiration, so both of the contracts were a little bit wild. It can sometimes be a day to shut down early or take off, but in this case, we ended up just drifting higher, drifting higher into the expiration of that contract and the close on Friday. So I usually don't take trades in the afternoon on Friday, but we did have a couple of 15-minute longs here in the afternoon. So again, these three I didn't take into the close, but there are setups in the afternoon on Friday. But again, it's one of those things where once in a while you'll have a fantastic Friday afternoon, but it's not worth it to sit there for the 10 Fridays that are slow and with nothing going on to wait for that one Friday that there are a couple of setups, at least in my opinion. So as I mentioned, that Tuesday, Wednesday, Thursday is where a lot of the trades occur. That's where I have my most number of trades. Friday would be the second. So Monday is the slowest, Friday is the second slowest, and then Tuesday, Wednesday, Thursday is where the bulk of my trades occur on both the ES and the Euro. So if I flip over, first I'll flip back to the daily chart. Delete this line. So you can see that we're right again at the short of the daily chart, and we traded off the long on the daily chart as well. So right stuck between those two with the potential here. We broke the prior swing high with the potential of going up to its target, trading from lows to highs, and trading back down into 1330s or whatever those highs end up being, taking the next daily setup or 15-minute longs off of that daily setup. The Euro was much cleaner last week, even though we had both contracts. We start in the daily time frame. We have a big daily short, traded down close to its target. So we went ahead and drew up the next daily short with the anticipation that we'll drift higher into 2890s. We ended up trading a daily long and then I'm going to actually delete all of these little drawings so it's a little cleaner. We ended up trading into a daily long and then a second daily long later, actually Friday, I think it was, and then holding it this morning. But last week, Friday, Thursday, Wednesday, Tuesday, Monday, was actually a pretty good clean week. There was a 70 pipper in there, a couple 50s, and a 60, I think. So let's zoom in and talk about them. Gary, do I make that a rule on Tuesday, Wednesday, Thursday? What's that? Just focusing on more trades those days? Yeah, that's just how it occurs. I just, looking at my notes, the average number of trades Monday tends to be slower. Yeah, it's just how it goes. Friday, a little bit more active, and then Tuesday, Wednesday, Thursday is just where a lot of the trades seem to occur. And that's been one of those things that are fairly constant. The Tuesday, Wednesday, Thursday seems to be when there's a little bit more volume and a little bit more action going on. That's when more of the news announcements come out that may have something to do with it. But yeah, it wasn't really a rule. It's just how it kind of occurred. I like to ease into the week and ease out of the week. Nobody likes to start the week off bad and end the week bad. So maybe it's partly trading a little bit with a little bit more caution on those days. That may be part of it too. So let's look at Monday to Friday of last week. And again, the 6E contract has now adjusted for the September being the front month. So June expired, now we're into September. Monday, okay, so we were in the daily long, which is noted down here at 1258. That was the daily long that we had. Once we load, there we go. 1258 down here. It traded once. We broke highs, and then we traded a second time on Tuesday. So I'll keep that drawing on the chart. And you can also pull from the same lows to new highs if you want. Either way, the important thing to note is that the long is the setup that traded first, meaning we didn't trade up to the short first. Our target is up here at the short. We'll be looking for shorts, but the first setup that traded was the daily long. So if I go back to a 10-day and zoom in, we had a retest of the daily level, and there were a couple entries or opportunities for entry. This is Tuesday on the 12th, and if I recall, 9 o'clock, yeah, was when we traded that retest. So rather than limiting a big daily level, I like to wait for it to test first, and we did have a test early in the morning, and then finally again at 9. So if I go to the tick chart on the 12th, and I think this was the one, the euro, I wasn't able to get data on the tick, so let me go to a 2-minute, and we'll look at that. So if we go back here, so this is a 2-minute. It's not as clean as I would like as the 512, but for our purposes here, it will suffice. Again, moving down, identifying lower high here, lower low, a lower high, lower low, again lower high, lower low, and now we get this basing pattern, double bottom. The most important thing, as I mentioned, is that break of the prior swing high. We have this long at 24.58. This is a big daily level, so rather than just place a blind limit out here, I like to wait for it to test. There was some support here, so I'll draw from lows to highs, place my order tick in front, or a pip rather, being the euro, pip in front, so 71s, stop at -8, and then once we get that +4 hit, I'll go ahead and move my stop to -4 and keep it there for some time until we get up out of that, at least 12, 16 pips before, continuing to tighten. If you're using 2 contracts on the euro or 4 contracts, taking half off at +4, moving your stop to -4 brings you to break even. So it's at that point that there's essentially no more risk on the trade, and then it can become easier to focus on trailing. And as I say, I like to trail from the next setup, so from lows to highs, place my stop under the 61.8, and then as we move up again, just continue to trail from lows to highs, and keeping the trail the 61.8. In this particular example, from Tuesday, we broke out of the traditional. So rather than drawing from lows to highs, since we broke out of the -23% target, this is a case where I'll draw from highs to highs and draw the extension, placing my stop 2 ticks underneath the 61.8. Sometimes it'll come down close. Sometimes it'll touch it. In this case, it pierced it by 1. We had a little bit of a bounce, and it came down and took me out here at, I think it was 08s. Yeah, 25.08s. But the thing with extensions is to remember that when we break the -23% target, when we break out really far, break out or break down, then we can go from, instead of lows to highs to highs. So when trading, question about 3 lots. So trading 3 lots on the ES, you could do 1 off at +2, and you could use a second target as an arbitrary target of something like +10, and then trail the last contract. I don't deal with odd numbers on the ES, so I can't give you a real example, at least on the ES. On the euro, though, trading odd numbers is actually is pretty nice. For instance, if you traded 3 contracts, I just mentioned if you did 2 on the euro, taking 1 off at +4, moving your stop to -4, now you're at break even. If you do 3 contracts, because say, okay, you're trading 2 contracts and you want to go to 4, well, that doubles your risk. If you go to, and then by taking 2 contracts off, moving your stop to -4, you do go to break even, but you're starting off with twice as much risk. If, as Gary mentioned, if you go to 3 contracts on the euro, take 1 off at +4, now you have 2 contracts for a runner, or you could do 1 off at +4, an arbitrary target of +16 or +24, and then that last contract for a runner. And having those 2 extra contracts to really move on the euro, because the euro moves so fast, it can really amount to much bigger winners compared to your losers. So doing odd contracts in the euro I think is great. The ES, I just keep them in even blocks. That's just kind of what I've always done. I haven't experimented a whole lot with odd numbers on the ES. So like I said, in this case, drawing from highs to highs, taken out at 08s, and then it's just a matter of drawing the next halfway back. At this point, it was getting kind of late in the afternoon. The euro session had closed. Things start to slow down, and if I go back to the 15-minute chart, the daily long below us, the 15-minute setup was right here. I'll go ahead and draw the next, or the full, halfway back. At this point, drawing from where we bounced off of the daily level to highs, brought us into, I think that was the overnight. We traded up to its target, broke out, and we ended up pulling back to the next 15-minute conveniently right at the NYSE Open. So that's, the NYSE Open, that overlap between the European session and the NYSE session, really I found gives the best opportunities for trading the euro, at least the style that I like to use. So if we go back to that 2-minute, you can either limit the 15 exactly, or if you like to wait, this one doesn't really show up very well, but waiting for that double bottom, that break of the prior swing high, and then drawing up the first micro setup that you can see, and taking a trade, putting your limit order, just a pip or two in front of that setup can yield for a little bit less risk on the trade. So because we traded the first 15-minute setup and we traded up to its target, we ended up breaking out of highs. If you were to draw from highs to highs, and this is all happening in the overnight, so waking up on Wednesday, this is what you would be seeing. Waking up on Wednesday, we traded the extension, had a little bit of a bounce. We broke the extension, and then it's at that point, if we go from lows to highs. Let's see. I'm a little bit. So we had a 15-minute draw here from lows to highs, and then we traded up from that same anchor, that new anchor, that halfway back low, halfway back long entry, up to new highs. And I'm just doing this on a 2-minute chart to get a little bit more data. We had the double bottom, first micro off of that 15-minute, and that took us all the way up. I wish I had a 512 tick to show here, but that took us up either by trailing the swing lows or trailing the extensions, highs to highs. Again, I like to, when we start moving fast, I like to go ahead and I'll start by trailing the halfway back, and then once we start moving fast, I'll go ahead and trail the extensions. Once you break out again, you can go back to traditionals if you'd like, all the way up. This was the 70 pipper down here, taken out at 04s in the middle of the day, right before the European session close. If I flip back to the 15-minute chart, and then so we had Wednesday, Thursday, trading back into, from continuing the 15 minutes. In the overnight session, we had another 15-minute long trade. And again, this is the European session, the Asian session, not a session that I trade. There's always going to be trades. There's always going to be another trade. So always remind yourself that, there will always be another trade There's no need to force anything that isn't there. So we ended up breaking the 15-minute long that traded early on. So I like to always go back to the full halfway back, but we actually didn't get there on Thursday. Again, the numbers are a little bit off just because of the two contracts that we're trading. So at this point, we had this bounce early on Thursday. So drawing from continuing the 15-minute setups that we were in, we broke the 15-minute setup. We ended up coming back to this anchor down here. And like I said, it's one of those hindsight draws that you don't know till it happens. But it's okay because on the 15-minute chart, we identify a support level. We zoom into the tick chart. And that's why I really like to use the tick chart for entry on the euro, because you don't always know exactly when the trade is going to set up. 15-minute identified itself. I zoom in. I look for that break of the swing high. I will draw from lows. Actually, so this is one of those instances where waiting for that trend to break as we were moving lower. I had the extension short drawn here. I entered in on the long at 63s, rounding up a tick. I ended up getting a first target hit, and my stop -8. And let's see, ended up getting a little spike. The 2-minute chart doesn't show it as well, but there was a little spike. First target hit, got taken out down here because my stop went to -4, was taken out. We had this little triangle pattern in here. I ended up drawing the next. Once we broke these swing highs, I tried to enter again and was successful that time, getting in, staying in, and then I just trailed my stop on since we broke out of the -23, I trailed the extension and then was taken out up here on the 512 ticket 80s. So that's one of those cases where you try to get in, and sometimes you get that first target hit, you get taken out. It's okay to draw the next setup and get in again. Not necessarily buying a retest, but buying another setup that may occur is perfectly valid. And then into Friday, things really stayed kind of steady. We had this 15-minute long traded right up to its target, and then when we have a 15-minute long trade, or when we have a 15-minute setup go entry to target, I like taking the next one at a limit order. So this next setup was valid at the 15-minute, or you can always wait for the 512 tick to trade. This was Friday, and limiting the 2605s with a stop at -8 once we traded a little bit higher, moving the stop to -4, so bringing it up to 601s, and then simply holding out, in this case, until the about 30 minutes before the close on Friday. I don't like to hold these kind of positions overnight into the close, over the weekend rather, into the close. So about 30 minutes before the market closed, just a matter of closing out, trailing the full halfway back all the way up, just giving it some room to run, which it ended up doing when we reopened on Monday. But being options and futures expiration, and being the end of the day, you can also put a target up here 4 pips in front of highs. That's always a way to get out when you're constrained by time. It's never the best exit, but it can be profitable to set a target just off of highs or just off of lows if you know that we have some end date coming up or end time coming up, rather than trailing the full and giving it all this room to come back. You can eke out a couple pips that way by putting your target just in front of highs or lows. So then, bring us into where we're at now. If I go out to the daily, traded up into the target, broke out a little bit. If we draw the next 15-minute, that's where we were sitting in today. That's where we were trading around in the afternoon. And so we'll see if we hold the 15-minute 61.8 and move higher. And that can take us up into 28.88s. So that's kind of a summary of, last week being options and futures rollover and expiration. A little bit crazy, a little bit wild. So, it's good to use patience, but those weeks can be a little bit screwy. So just keep that in mind. But going forward, like I said, we have FOMC on Wednesday, and the day after and the weeks after tend to be really technical. So I'm really excited for the rest of this week, and then moving forward, rest of June, July, and August. Now August, the last 2 years, just as a heads up, have been very lousy. They've been very choppy, and this is just the pattern of the last 2 years. This number right over here, VIX 18. If volatility stays really low into August, then I won't be expecting a whole lot at the end of August because a lot of people are on holiday. Going into the U.S. Labor Day weekend, things can get really slow and uneventful. Coming out of Labor Day, though, I anticipate this volatility number to be much higher, upwards of the upper 20s, hopefully. So, and then that takes us into the fall, which ends up, September, October, November, December can be fantastic months. The last 3 years have been fantastic, both in March and April, and then October, November, December. December slows down at the end of the month, but the first 2 weeks of December are very good. So, at least in the past 3 years on notes that I have. So, that's kind of where we are in the ES, stuck between the halfway back long and short. On the Euro, in a daily series of longs, a 15-minute series of longs that are taking us up into the daily short. So I hope that was helpful. And next week we'll talk about another little strategy that I've used in the past, a high of low bar and low of high bar for those people who like breakout strategies. It's something I still use on stocks, on daily bars, but you can also apply it to intraday. So I'll put something together. I'm working on putting something together for that, and we will talk to everyone next week. So thanks so much for your time. I hope you have a great week and a wonderful weekend. So take care.